Good morning, everyone. Welcome to another RF Crypto video. Today's markets have been behaving very well. The markets are up by almost 5%. The global crypto market cap yesterday was 1.71 trillion, and today it gained about $70 billion, and now it's standing at 1.78 trillion. Bitcoin is up by almost 5.5%. Ethereum always overreacting, as we saw, 6.31% up. Whenever the market goes up, as I said before, Ethereum goes up by a larger margin. Whenever the market goes down, Ethereum goes down by a larger margin as well. Even Tether is up. Wow. So the markets must be doing very well. There are a couple of reds, but in general, the markets are in the green. Looking at the top 50, everything's in the green. Obviously, there are some coins that are in the red, and these are due to token-specific factors that are uncorrelated to the market. Looking at the Bitcoin chart, it's very interesting what happened here. There was a spike at midnight where the price shot beyond the $40,000 resistance level, and it tested the new resistance level of 42,000. So when it reached almost 42,000, if you can see this red wick over here, the bulls came in the market very strongly, and they sold off, and the prices went all the way back down from 41,600 to about 39,280. So it seems like this bunch of people that sold right here made a big bunch of profit. And then when the markets dipped again, the bulls took over, and the prices have been going up for the past 8 hours. And the prices are going up and slightly down, up and slightly down. It seems like it's a tug of war between the bears and the bulls. But it has broken the $40,000 resistance level, and this resistance level might be the new support level. So we might see the prices now trading between 40 and 42,000 in the next few days, obviously barring any sort of good or bad news, which if it's good news, it will overshoot the price above this $42,000 level and make it trade between 42 and 45,000. Or if it's bad news, it might make the price go below 38,000 and trade it between 38 and 35,000. Now it's a matter of seeing how the markets react and how the markets behave in the next few hours and in the next few days. So the Hang Seng Index, which measures the top Hong Kong Stock Exchange companies, between 10th of February and 16th of March, it went down by a massive 27%. So an almost 30% decrease in the stock market within a month is a massive decrease, and it is indicative of a mini crash. And this is when we saw crypto prices being pushed down as well. However, in the last 24 hours, not even in the last 24 hours, so in the last 8 hours, when the Asian markets opened, we see here that there was a massive spike in the Hang Seng Index. It went up by 9%. It recovered some of these losses, and net losses in the last 30 days now stands at about 15% rather than 30%. So we'll speak about why there was a massive increase in the Hong Kong stock market in a while, because 9% is incredibly massive in terms of stocks. As a result of that spike in the Hong Kong Stock Exchange, or in the Hang Seng Index, the S&P 500 also reacted by increasing by 2%. Obviously, S&P won't react as strongly as the Hang Seng Index, but whenever there is a good sign in the Asian markets, it always translates to a good sign in the American markets, barring any sort of negative news. This is why we see this. After a couple of red candles, we see two nice green candles, and we see a 2.14% increase in the US stock market, which is quite reasonable, and that's a good sign for the stock market going forward, because it's trading between $41.20 and $4,300, and these are the support and resistance levels, and it almost reaching the resistance level, and if it manages to break through, we might see it going up all the way to $4,500 level, erasing the losses from the past month. So why did the Hong Kong stock market, or the Hang Seng Index, shoot up by 9%, which is incredibly massive? For context, Hong Kong stock market posted double-digit gains during the Wednesday afternoon trading session after China's State Council pledged support of the stock market. So the main reason why there was this massive spike is because China's State Council said that they would support the stock market and that they would help revitalize the market after its worst slump since the 2008 financial crisis. US and financial regulators and their Chinese counterparts are currently engaged in a dispute over the availability of Chinese company audits to US officials. The US has threatened to delist Chinese companies should these audits not be approved. And this is what caused a massive decline in the price of the Hang Seng Index yesterday, because of this threat of delisting. However, the response for the Chinese government was swift and it was very positive because, according to state media reports, regulation of Chinese tech sector will soon normalize, giving some sense of relief to a sector which has seen increased losses in the past month. The government also said that they would handle some of the risks for property developers. The fact that they said that they would support the stock market, combined with its positivity in terms of its tech sector, plus saying that they would handle some risk for property developers who are seeing massive losses and risk of bankruptcy, which would lead to a collapse of Chinese real estate market, which would have massive contagion to the whole world, because the Chinese stock market is very much intertwined with the global markets. It's massive, it's in the trillions of dollars, and a collapse of Evergrande, for example, which is the largest property developer in China, could have wild and wide-reaching effects, which would bring down the global financial system and cause a global recession like the one in 2008, or even worse, because now the financial system is much more evolved and there's a lot more money in the system as well. And that's why the Chinese government a couple of months ago bailed out Evergrande. There was a $300 billion debt, and that was probably paid by the Chinese government so that it doesn't go bankrupt and it doesn't cause another financial crisis. And the Chinese government had never done this before. It was the first time that they did it. So it sets a precedent for them to do it more and more. And I think that this is what they mean by the fact that they will handle some of the risk for property developers, in the sense that they might bail them out, they might buy some of the properties off their hands, or they might bring in new regulation in order to sort of stabilize the Chinese real estate market and prevent the mass building without any sort of demand to back it, which has caused this debt crisis in the first place. On other news, HSBC enters the Metaverse through a partnership with the Sandbox. So HSBC, with almost $3 trillion in assets, is the first global bank to enter the Sandbox Metaverse. And the bank will buy a plot of land in the Sandbox Metaverse, which it will develop to engage with sports, esports, and gaming fans. They have not really sent out details of what their plans are with the virtual plot of land. They just say that they see great potential in creating new experiences through emerging platforms, whatever that means. I think that we're going to see a lot more sort of announcements from HSBC in the coming months on what is going to be their game plan for the Metaverse. And I think the Sandbox is a very good alternative to Decentraland. And these two are the main actors in the virtual land sphere. Obviously, Decentraland is the king of virtual land. However, Sandbox isn't so far behind. They have Gucci, Warner Music Group, Walking Dead, Snoop Dogg, and Adidas as partners and working with the Sandbox. So it just makes sense for HSBC to partner with them, especially since JP Morgan, who is their rival, bought a plot of land in Decentraland in February. Relating to the Metaverse and of course NFTs, American Express files trademark applications for Metaverse and NFT logos. So the second largest payment processor, which is AMEX, has filed 7 trademark applications linked to the virtual services and its iconic Centurion logo, joining financial peers JP Morgan, Visa, and MasterCard in exploring Web3 applications of its IP. They filed 7 trademarks for American Express, AMEX, Centurion, Shop Mall, and membership rewards, indicating plans to offer NFT-backed multimedia, cryptocurrency services, virtual banking, plus exchange services. And this comes at a time where other big payment processing platforms are entering the Metaverse and becoming more acquainted with NFTs. For example, Visa last year paid 49.5 Ethereum, which was about $165,000 at a time, for a CryptoPunk, a series of 10,000 pixelated avatars. And their justification for this is that over the last 60 years, Visa has built a collection of historic commerce artifacts. Today, as we enter a new era of NFT commerce, Visa welcomes CryptoPunk number 7610 to our collection. And this makes a lot of sense because Visa has always been innovative, they've always been ahead of the curve, and they always want to be the first one to get with the times. Also, last summer, AMEX began dabbling in NFTs, offering card members a series of 14 NFTs featuring the recording artist Za, each costing $100. I think this was a test run to see how NFTs work, how the Metaverse work, and how they can further tap into it. Also, last month, JP Morgan launched Onyx Lounge, a virtual lounge in Decentraland. We mentioned it before when we were speaking about the HSBC. and they called the metaverse a $1 trillion opportunity. That is more than half of the current crypto global market cap. So JP Morgan is saying that over and above the $1.7 trillion that is the market cap of crypto, you can add a further $1 trillion on top of that just from the metaverse. Finally, Instagram is soon going to add NFTs, says Mark Zuckerberg. In addition to that, Zuckerberg also said that he hopes that in the coming months, Instagram users would be able to mint their own NFTs in the platform. And this makes sense that they're dabbing into the metaverse, they're dabbing into NFTs, because in October, Facebook, which was previously Facebook, changed its name to Meta to focus on its metaverse-related projects. Company reports from 2021 revealed that its virtual and augmented reality research and development business, Reality Labs, showed $10 billion losses. However, Meta's corner of the metaverse is not alive yet, so it's hard to turn a profit from it. So we see it more as an investment from Meta in the metaverse for future gains. So they're investing a lot of money now in the hopes that they can tap into the gains that are going to come in the next few years. And this makes sense because they have so much cash in hand, they might as well plan for the future. And also they want to stay ahead of the curve, ahead of the competition, because social media companies have also been implementing cryptocurrencies, and they've also been implementing NFTs into their platforms. For example, Twitter added support for NFT profile pictures this January, Reddit implemented NFT avatars from its own collection, and OnlyFans enabled NFT profile pictures in December 2020, which is a long time ago. So OnlyFans was the first one, or the first social media in the NFT picture, and we're seeing more and more getting into the picture, and obviously Meta doesn't want to stay behind the curve. So this decision that they're making makes perfect sense. And that's it for today's video. Thank you very much for watching. If you liked the video, please leave a like, hit the subscribe button, share this video with your family and friends, and I'll see you tomorrow for the next one. Invest wisely, and cheers.